We thought Trump was going to come in hot with some announcement about China that was going to have a massive effect on the economy and then a catalyst for the markets. But he didn't come in hot. He came in lukewarm. There's the obvious issue of Hong Kong. So China is imposing their national security, their police force, their rules essentially on Hong Kong, absolutely squandering their freedom. Doesn't look like Hong Kong is a beacon of freedom in that region anymore. Looks like Singapore is the winner here. I would definitely be interested in some Singapore real estate. All the financial services, all the people in Asia that want to seek freedom and seek lower taxes and seek no capital gains taxes, Singapore is now the place to be for that. There is no Hong Kong, so that entire competitor and that, national competition is no longer there. Now, that wasn't the only thing. So let me preface this. This is not a social justice chat. This is sometimes a justice chat, sometimes discussion about issues that affect me negatively, like freedom of speech. But when we're analyzing the markets, we don't really analyze the markets from a social perspective, a purely analytical perspective. So another important thing that Trump announced was the decrease in student visas for Chinese citizens studying at U.S. schools. So we have the best technology in the world in the United States, by far. All of China's technology, their entire economy, has been on the back of our technology and our expertise and teaching the Chinese. This is why intellectual property was such a hot topic of phase one of the trade deal that needs to be addressed more in future trade deals. China is able to siphon our technology and create it and label it for themselves. They're able to do that through two ways. One, when U.S. companies build factories in China, they can essentially see our technology and rebuild it. And when you bring a company to China, you have to have a joint venture. So the Chinese own half the company. Another is Chinese students in the United States learning our engineering, our finance, all of that. So one of two was affected significantly. There will be a lot less people being educated in American expertise that are Chinese, then going back to China and sharing that knowledge. Now, I thought this meeting today was going to have a lot more to do with the factory situation. Top U.S. economic advisor Larry Kudlow last week said that they would pay for all U.S. companies and all expenses for U.S. companies to relocate the factories from China to the United States. That would prevent China from seeing the technology. And that would be a massive, massive power move on China because China is going through a bigger unemployment crisis than us. They've got the same kind of unemployment issue, but no unemployment benefits. And most of their jobs are U.S. companies. A lot of their jobs are U.S. companies hiring manufacturing workers. Trump has talked about bringing jobs back, bringing manufacturing back. And now we've got the unemployment issue. And they're saying they're going to pay for those factories. So I thought that was going to happen today. Didn't happen today. Let's see what happens there. Regardless, it looks like under the surface of the Hong Kong thing, there's a little more of a divergence in the sharing of information between the United States and China. Let's see what China does about that, what they say about that overnight, because that is their livelihood is essentially U.S. information, U.S. technology. So I don't think they're going to react positively to that. And it's not good for them. It's good for us because, our technology stays our own. We've got our own intellectual property. We have our own technology innovations, all that. China doesn't get to siphon them anymore. So I think it's good. Obviously I have a lot of Chinese friends and a lot of students at my school who are Chinese. And for them, I don't want that to be the case. But from a markets perspective and from a pro-America perspective, it's more of the factories than the Chinese students. I think people should come here and go to our schools. And I think information should be completely democratized and free to everyone. But, it's the first step in that dealing with the intellectual property rights issue. So who knows? The catalyst for the market downturn that I kind of predicted, short-term market downturn, didn't seem to happen. That said, I don't really see a whole lot of steam in the upward direction right now. I see a lot of flattening, kind of leveling out around this level, and just more of a wait and see approach. I think a lot of sellers are going to be people that bought at the bottom that want to realize some of their gains. Like right now, if I didn't have such a long-term time horizon, I would probably be taking, 10, 20% out of positions that I'm up big on. And I think there will be other people who do that. So I think the overall trend is definitely still forward, up. There could be a pullback, but the catalyst for the pullback is no longer here. I would stay calm, stay long, and avoid moving too quickly in either direction, because there's really no catalyst for anything right now. The catalyst was rising U.S.-China trade tensions. There were no trade tensions as of today. Nothing new added trade-wise, just issues with Hong Kong that's going to have its own issues, but we'll see what happens there. So no catalyst in either direction. Market did rally towards the end of the day, but nothing crazy. So nothing crazy is going on right now, but when there's a catalyst, I'll be talking about it. Until next time, peace.